Everybody, welcome back to our Trading ThinkScript class. Good to be with you, and appreciate your patience in just getting that started up here. My name is Mike Fairborn, and folks, today I did want to take a look at harnessing the power of volume, looking at another indicator out there that we can use uh, to try to define volume and volume strength specifically at a given time. I also want to look at relative volume buildup. Are we trading above a relative average volume, folks? But we're going to combine this today with the breakout. It's something I've been thinking about for quite some time, but a topic request kind of got me going on it and said, I've always really wanted to do that. So we're going to combine that because a lot of times if you can break out above a range with volume, there's just a lot of times what you'll need is more volume to offset what you'd normally get resistance at, which is a prior high. So if volume, let's say, is 2 times the average on a breakout, a lot of traders will say, hey, that's sort of in many ways, that's one of the confirmatory elements they're looking at for the continuation of a move to the upside, which could work on a swing trade time frame. Of course, it could also work on longer term weekly breakouts that might take months, I'll even say it, or even a year to break out of a range. Those are very interesting to keep an eye on. So we're going to take a look at that today for sure, and excited to get into it. Welcome to each of you. Hello to you, Will. Will and his sunset's perfect. We've got Sharon, Robert. We've got Scott, Chris, Riceberg, Kelly. A lot of usual suspects here. We do even have with us joining us Mighty Mouse, who has been out in the woods for a while, I believe. Haven't seen Mighty Mouse for a little bit, but good to have Mighty Mouse on board. Tracy and others, folks, if you are new, Eric, Scott, let us know in the chat if you are new. But in this class, we do look at ways to utilize ThinkScript, that is the ThinkScript coding behind the scenes, to help position technical analysis mainly, although we have looked at fundamentals in terms of possible setups, breakouts, helping to confirm indications, combining them together. Today, really looking at volume increasing over a certain time frame at the same time that we're breaking out, taking out a range with the volume rate of change. So VROC plus a relative volume that I wanted to dive into. But with that, that's enough talk. Let's hit some disclosures so we can get going here. Equity and index options carry a high level of risk, not suitable for all investors. Information here is for general information purposes only and should not be considered an individualized recommendation. Now, Paper Money software application is for educational purposes only as well. Backtesting results presented are hypothetical, and there's no guarantee that the same strategy implemented today would produce similar results going forward. Now, investing involves risk, including for some products more than your initial investment. Past performance of any security strategy does not guarantee future results or success. I do leave on futures. We have a futures disclosures in here because we do like to look at those charts, but futures and futures options trading does involve substantial risk. Not suitable for all investors. Of course, we do not trade futures. We have futures classes that we do trade. All right, and hello to you, KFRAZF and others. Welcome on board if you're new. And so we'll take it through this and to each of you joining us right now. So let's do this. Let's get into it and get started here and hopefully build some ideas for potential breakouts and looking for volume indications of strength going forward. So I've got up here actually an indicator that I took a look at in our swing trade class, which is interesting. In fact, I might be able to dive back into this a little bit later today, but it is kind of interesting, unique, more of a confirmatory sort of an indicator that some traders may use. But when prices are actually trading above a high range, like right there, it's a high average. When you're able to get above the high average, sometimes prices can move and they can move quickly. You'll notice that sometimes, depending upon what you've got, this is actually a Google 20 period moving average. Hitting those highs, not really breaking through, but notice when you get above the high 20 period moving average, not just the 20, but above the high, it can be interesting. And I noted this because we're actually going to use this today as well. Sometimes when you get above the high level, if I draw a trend line coming down off the top there, look at that. It's a trend line break as well. Those two can and often do coincide when you're taking out the high level of a particular moving average. It's, it kind of forms with the range pretty well. It might also be indicative of a trend change that's upcoming. Anyways, that was the swing trade class. I'll reference it a little bit later because I do want to tie that into volume as well, as we dive on into things here. But in the meantime, what I'm going to do is just do a reset on this chart. I guess my default there is AVGO, which by the way does have earnings coming up. It's one of those tech stocks, not a Max 7, but many do like to put it in that group. But it does have earnings coming out. Okay, it turns out I did save those in there. So let me just take these out for a bit. We can always reset it when we need to. Here is a look at our markets showing some strength here. We've had some, pretty interesting strength. And by the way, it hasn't been too unusual for us to get a few days pullback, a few days pullbacks, and a bounce. Now that right there, if we dive into it, that is a bit of a morning star right there. And those can be reversals. That does fit within the 2 to 5 day time frame in terms of a pullback that we have been seeing with this existing trend. And by the way, folks, I did want to, as I dove on into that, sorry, there was a little bit of audio issue at the get-go. I forgot to introduce my good friend and colleague. Sorry about this, Kev, but Kevin Horner. Please follow Kevin at Kevin Horner CS for some great content that he does show on X. Mine is Mike Fairborn CS, but thank you, Kev, for having my back in the class here. It's always great to have you on board in here with us. Yes. Oh, by the way, yeah, that swing trade class, just answered that. That is on Tuesdays. And I'll put a link to that class that I did this week because it does tie in a little bit to our discussion. There was some overlap there. I'll put it at the end of this class. Of course, that'll be on the recorded version. But yeah, you can find that on Tuesdays. Same time, actually, just on Tuesdays. All right. Perfect. Now, I want to talk about it right now. I wanted to we'll just jump right into it. I want to spend all our time really talking about. We've looked at a number of different volume indicators. We've tried to harness what we can get from volume, as we go through this. But as we dive on into things here, but there is a volume uh, rate of change. It's all one word, no spaces in here at all. I'll click on it real quick. It is a fascinating little indicator, and I'm going to show you how we're going to combine this into a ThinkScript. And then with that, also in terms of breakouts, a breakout range, okay? So it just is an oscillator calculating the percentage of a change of volume relative to the volume a specified number of periods ago. So what it does is it goes back in time and it says, what's the number you want to take a look at? Is it 5 bars back? Is it 10? The default is actually 14. Comparing this volume to the present volume over here. I'm just choosing 14. I'm actually going to be using 5, but that's the default here. Some might want to use it. So it's looking over that time frame and saying, okay, well, what about the current volume as of now? And then we say, based on this volume, this is what our script's going to do here for us. We're going to say basically just a ×2 over here. We're going to say, I want to see double that volume on the indicator itself. Okay, now this is going to coincide with a breakout that we said is so important. What you don't want to see. Let's do this. I'm going to go ahead and just highlight this. Let's put it on. And then what I'll do is I'm going to make it a little bit thicker. I'm going to use the 14 initially just so you can see it. And I'm going to make it a shorter term time frame and show you how that gets adjusted as well. Okay. So, oh, we don't have volume here. Perfect. Okay, so let's go to Google on it just as an example here, and I'll show you a couple things. Now, that's what you're seeing down below right there. Let's kill the other ones. The other indicators, want to put it on just real time though, as we get it right there. That's what this looks like, and it looks totally chaotic. I've got to explain it to you so you guys get it down. But we're going to take this indicator and we're going to combine it with a breakout. Now, how's that going to work? I'll show it to you in just a second. A key point, I left Google on here. I left our downward sloping trend line. We can get all kinds of fascinating indications here that can occur. Now, let's explain this volume indicator just so we know what's going on. Now, the default, I'm going to flip it to 5 in a second. Default's 14. So there it is again, our half moon cycle. Kind of interesting. 28 days. We cut it in half. This is they did a lot of this like in the 70s and 80s when these indicators were being built. But anyways, they might have stuck to it later. Anyhow, this is how it works. We're getting an average over a period of time. And what we're seeing is what is the rate of change relative to 14 bars back? And that's what you're actually getting over here. Okay. Now, does that sound interesting? It sounds kind of fascinating, right? I mean, notice over here, we're looking at this was a break above a level. Let's flip some colors here. That's a trend line break, which can mean the change of a trend. What is interesting here is you got a trend line break and it was followed by a more than double the range. And I'm going to highlight where the more than double comes from. If I was trading over here, but on this particular bar right there, if we go back over a 14-day time frame and we look at it, this moved up because we're looking at 14. Look at it. See that right there? How did it do relatively speaking? Folks, we're substantially higher. We're clearly more than double that range, and that's the spike you're going to see. The spike. Now, the one thing you absolutely have to ignore, because this always bugged me, and I could never quite get it until I really tried to dissect this down. Notice how it dips afterwards? Who cares? It doesn't matter. It's comparing it back to 14 bars ago relative to that bar. So we actually had a confirmation of volume in here because we had this VROC, the volume rate of change spike. So when we broke the downward sloping trend line, we saw a spike, and that was interesting, and we got it. We also did this too. Did we not break above prior highs? Folks, it's very difficult. Maybe some of you guys have looked into it that are really good with the script that I know of. Chris, Robert, Will, Riceberg, you guys are understanding this, and Austin and others here. But it's challenging to get a trend line break. What's not challenging is when you get a break above a high right here. We've talked oftentimes. In fact, we built a simple price channel breakout above a 20 time frame, which this would have caught as well. That helped to kind of prompt me to get going on some of these because a 20 period breakout is interesting. I mean, we're breaking highs, trend line break, and it's with a fascinating volume rate of change breakout. These can all be combined within a single script. Not the trend line break, but the other two can. Okay. But okay, I've got to highlight this. Do not worry about this drifting back down. It on this indicator, the way that it's formulated, folks, it is all, 100% about the spike. It's the spike range that you're getting over here. Notice over on earnings here too. Confirmation earnings to the upside, okay? Did it break above a longer time frame? It did. Was it making a 20-day new high or breaking above a 20-day high new range? It was. It was. These are confirms, okay? Look at today. Notice already today, what's the volume done? The volume's weak. And the volume's weak down here. Doesn't matter. In fact, that can be construed as a positive sign because volume staying low after we've broken out and kind of flattened out a little bit. We just don't have a lot of sellers in here. More than anything, I just don't want you to be thinking about the decline back down. If we were looking at this as an RSI, or a MACD or a moving average, yikes, that could be, that could be like awful, like a sign of real weakness. But are we seeing that weakness over here? You know what? We're not. Look at this over here. That's a massive decline. Let me point to it. Do you see any price weakness there? No. We're seeing it hold that range as prices dip. So we've got to park that in our mind. We absolutely have to. Okay. But, with this, we could run this by itself. I've added it with a breakout, which we can strip today and just look at the breakout too. That's not a problem at all. But I wanted to show you, like, if I take this out and just black screen it here, which is so nice and easy to see. If I have a longer term range and, it's going sideways or whatever, and we begin to break out, this is kind of a triangle sort of a setup, right? This resistance comes in because of sellers. That's what's creating it. Prices are coming back down. We're just getting selling pressure. A lot of times, as you know, charts can go just like this. They can just go, and they just get stuck there. We just don't get enough buying pressure to get through. Now, what is risky is when you break out above here and the volume is weak. If the volume's weak here, to me, it's more of a fake out, not a breakout. And if that happens, you can get this. So a lot of times on those breakouts, you're looking for basically a 2 times the volume. I've got the indicator in here, actually the scan where we can adjust that so that we can see where we're at. But that's really interesting. Now, the other thing is too, is I've put a look back period of about 4 bars in here, about a 4 bar look back, because it's a 4 bar look back on the breakout and on the volume, because the spikes are like this, they go up and they just slam down. So that's a significant thing to be, considering. So we're giving it within 4 bars, 1 to 4 bars, that breakout right there has occurred. And the reason is this: sometimes when you break out, it goes right back down, and it goes. But also, I wanted to have enough to look at today to show you guys what's going on. Okay, let's get to it right now. But just so you know, I mean, it is combining the two so that we get volume there. We can do large scans and we can adjust it too. But this is taking a specific day. I've got another one where I'm just looking at average volume too. The last thing I'll say before we put the script up and start looking at some of these stocks here is that if we go back in time, a lot of times, depending upon where you're looking at, I'm choosing 5 bars to look back over here, a 5 bar compared to the current bar. If we do that, a lot of times you might get mild, mild, mild volume and then the big explosion up to the upside. Now, what's fascinating here too, before we're done, is we saw sort of a capitulation, sort of an indication on volume, and you got that spike right there as well. Now, that can be a very interesting indication of capitulation where we just had this spike. A lot of times they are between 50, 100. Obviously, there are some big ones in there too. That one was massive. That was over two. I mean, that was an incredible spike from the prior days. But really, this script is going to be tied into that breakout that we've talked about a number of times, the 20-day breakout. Throw it on the chart so you could just see it. So we know what's going on behind the scenes. It's a price channel combined with it. Here's the 20. Perfect. We got to make sure that we do not show the lower band, just the upper. It's fine. Let's put it to a color we can recognize, because we got two things going on at the same time. Okay, there you go. So you see it right there? It's just looking at a 20-day new high. Now, if you're just breaking out and running high, yeah, that is a 20-day new high. And that too right there, just like we saw, combined perfectly with that volume spike, is a 20-day new high breakout with double volume. Okay, it's a big spike. Now let's do it right now. Let's go back over here. Let's pull it up. I don't have it. That was actually our ThinkScript class. Let's go over here and we'll pull it up right now. Remember, ThinkScripts themselves, folks, they are not guaranteed for timeliness or accuracy. But so many scan queries in here. Let's see, volume. Ready to change breakout. There it is. Okay. I'll go ahead and scan it. We'll pull it up right now. And Delta's been coming up throughout the day as well. So I want to highlight Delta. Remember, this ties in. We'll pull it up right now and I'll show it to you. It's really, really straightforward though, in terms of what it does. Okay. So I'm going to adjust it right now though to the look back period. I had it saved as the regular amount. And I'm going to do this. I'm going to say, let's see, we'll go 5 here. And then what I'm going to do is I'm going to say my price channel is, instead of a 30 price channel, I'll resave this before I send it out, but you guys can use this too. I'm going to use a 5 period as opposed to a 14. I was using the defaults initially, but there we have it right now. Okay. Let me click on it. I'll scan it again and I'll just share it so you have it. There is some variations. They're actually there's the delta coming up. You can look at a number of different time frames, but let's do this. So again, ThinkScripts aren't guaranteed for timeliness or accuracy, but boom, there it is. There's the first one right there. So I'll just do this VROC. And for those of you watching this class on the recording, I will put that in the description field listed below the video on the recorded version. But there you go right there. Okay. So you can come in here and check it out. We don't have as many today as like we had yesterday or the day before. We had quite a few over there. I'm using the S&P 500 as a guide, as a basket. You can use a larger basket. Remember, these are just kind of like large cap stocks. If I wanted to do the S&P 600, if I wanted to do Um, gosh, the NYSE, that's 2,700 plus stocks. I mean, you could look through a larger basket for sure, but I want to highlight what's going on here as we go through it, and we'll look at the script too. Let's use Delta as an example here. Okay, so there is our indication up top showing us what's going on behind the scenes with that scan. Do you see the breakout? I want to take the breakout line out of here for just a second, but it's following it. Do you see the spike within a time frame? In fact, it's picking out a big volume day. Now it's looking back, comparatively speaking, to 5 bars ago on the spike. Yeah, I think right over here is what we're getting. But anyways, you need to try to get, I mean, you don't need it, but it's great to see stronger volume coming in as you're taking out a range where sellers have been previously. I mean, how do you offset the selling pressure? That's how you do it. Now, the other is always interesting with deltas because there's such a huge component in here with oil, right? And the price of oil. What's oil going to do? Quick note, let's pull it up. Let's just so we can just take a look at it here. All right, so there's oil. I mean, if oil does break down, that could really help, Delta. I don't know what else is going on specifically. I could just tell you that we're getting, that volume spike that came in right there and it picked up on it, okay, over a 5-day time frame. So that's the combination of the two. Let's look at this big picture as well. So you see Delta coming up. Now there was a high there. So clearly resistance, resistance, resistance. There's a lot in there. Notice here, it's a right-angled triangle coming up. Higher lows, similar highs, yet higher lows. We're getting inching closer. And now what are we getting? Right there. We're getting some more volume with a price move. Could somebody just wait to get maybe a confirmation too? Yeah, you could wait. We talked about this before, and we looked at it in other classes. As somebody might see general strength in this stock, there could be, a trade type strategy that, some traders might employ. And that specifically would be something along the lines of, maybe selling an option down here. Now, short puts can be assigned at any time, and I did read the option disclosure at the beginning. But just as a quick note, um, sometimes they try to sell a put down in this range over here or below a certain level because they're saying, well, maybe it takes time to break out. Maybe it does one more dip and it keeps going. But in the meantime, I'm trying to collect some income as we're seeing general strength because it hasn't broken out yet. Now, if it breaks out, is there anything really stopping us from buying the stock? I mean, if somebody wanted to, in this example trade, somebody could, right? If they're saying the volume plus the breakout, they could do it, but that might be a way as you're kind of waiting for something that you see general strength. I mean, it would have been that strategy probably would have pretty much would have worked okay over the last couple of months. I'm just if it didn't break it, below a particular range that you were selling at. Of course, they can be assigned at any time, but traders will say if prices can hold above that level, I can try to collect that income is the goal there. So I wanted to throw that out there just as a general idea, right? We could do that. So, all right. Yep, perfect. And thank you, Kevin, very much for typing that in. Yep, scripts aren't guaranteed for time, Mr. Actually, but as long as the data that's flowing into the platform is good and we have good data, then, I mean, it's just a mathematical formulation. We just state that, it's not guaranteed. Anyhow, that's that. So again, what's going on here with the volume indicator? So generally speaking too, as you read through that description, it's often used to confirm or deny trades that are developing under different sorts of price action conditions. What are those conditions? Are they breakouts? Are they a trend line break? Are they maybe bounces off a bottom, perhaps? What about price patterns? What about a flag pattern starting out of a base? We could have easily designed this around a hold that has a lot of strength or a pullback. We get a pullback over 5 days, and now we're seeing some bigger volume come in. Flag us. Let us know about it. Okay. But again, it's going back and hitting a specific point in the past. Let's come over here and hit some other ones as we look at this. So this one in here is too. We got DXCM. We got some others in here. I wanted to say the CVX was on the longer term one. Did it break out over a 20-day range? It did right here. Tied to oil, no doubt about it. But we did have a volume spike that met the criteria right here. Now, it pulled back a little bit from there. It didn't even hold that support. It's tied to oil, so it could be quite volatile. But could it be one to watch too? I mean, some traders might say, well, if I anticipated, this is so tied to oil, though, you just have to be very, very cautious of it because oil can be, I mean, well, it's the Middle East and we don't know what's going on. But again, could there be other strategies that traders could look at on something like this? There could be. So just as a quick note on something like that. Now, oh, let's see. Somebody said, let's see. So we're looking at now. This is Peabody Energy. That's coal, isn't it? Coal. Okay, so you got a spike down here. Now, what some traders might look at on this is a very sort of an interesting longer term chart. A lot of strength over here, a recent pullback. What if we did this? Because we were getting some volume maybe building up over here. I mean, I'm looking at some spikes. Remember, if it's coming down low, that could mean capitulation at the bottom. Do we do this? Do we start to break above a high level here? That's the question. I mean, could the trend flip? I think that's interesting. I mean, this has been an interesting sort of a chart here. Longer term one too. Yeah, yeah. Let's right click on it. And I'm just going to, tap into another tool here, create an alert. Here we go. And I'm just going to say breakout question mark. I love to go through this with you guys, and I do it every week generally, but on these breakouts and just, try to get a look at this too. But if you go in and you're using the alerts, make sure that down below you click on the sound and mobile device. Otherwise, you'll be like me early on and wondering why you're not getting the messages. But if you do that, which we just did, and did I set the alert? I don't think I clicked OK. I got talking and there you go. I didn't. Okay, so let's just say breakout. You got to click create and there's your line. Okay. To set those up, just go to setup, application settings, and then you want to go into notifications and you can go to email. The computer can make a sound. Of course, I'm doing it through a mobile device, a cell phone here, which I've found to be interesting, a good way, an approach to do it. I want to do this too. I just got to read just a quick disclosure on that because I did bring up alerts. Alerts aren't guaranteed to be delivered or delivered at any specific speed or time frame and should not be used as a replacement for actively being aware of your positions. Now, that's true. If I had any issues with alerts not going off, no, but we just don't guarantee them because things can happen, right? Sending messages via text messages, things like that. So there you go. But yeah, that's cool. All right. Just pulled that up. Yeah, absolutely. Chris says, yeah, so we could pull that up. Yeah, we could flip that real easy. And that's the beauty of this, the way that this has been designed. Come over here and just flip it to like a 14. And by the way, if you wanted to, this is going to be cool too. Let's do it while we're here. Let's do a 14. Cool. Great. A look back period of this. Okay, we're looking at the threshold. So I'm looking for a bigger move here. Okay, we're saying it times 100. Okay, but we can also adjust the channel length too. Let's do 20. Let's do 30. I'm going to click OK. You can do it that quick. There you go. You're getting some others in here. IBM, SWKS, SWKS. I want to take a look. Let's look at this one. Oh, there you go. Oh, clear volume spikes over here. Clear. Another one here too. This is the one we're flagging is right there. Chris and everybody, right? You get it? We're taking out the high range. It's getting flagged. Now, would we have got one here? Almost certainly. Do you see anything within the general perspective of this that shows us potentially an interesting indication? Chart-wise. Cup and handle pattern. follow through? Could we watch this going forward? Could we employ, another strategy to try to potentially create income while it's developing? Sure. I mean, these are certain things we could look at. But there you go. That one's right there. I mean, that is, oh, let me show you this. Do you see a difference over here? Remember, it's breaking above the range that we're so focused in on here, which is what the script is flagging here. Look at this. We took out these levels. This right here is interesting because we're getting it above that level. And coming back to what I said earlier, you need that kind of volume to offset the strong selling pressure that's kept it at those levels. So really just trying to harness the power of volume here is what we're really looking at. What else did we have? We had an IBM in there too. What's up with IBM's been down? There you go. Okay, so that's a big move on IBM. This is interesting because this one's being flagged by the scan today. And that's it right there. So that's it. We might have had this on the 5-day one, Chris, as well. What could be interesting here? Have we seen volume like that to the upside previously? Well, that was a spike, but that was down. That was a spike, and that was also down. The move in price was down. This is really the first one we've seen to the upside. Now, some traders, because we've talked about it a lot, might just say, well, what about that level? Some might say, hey, it could be developing. And by the way, if you start to get above a higher high and a higher low here, you know where it's coming up at? The 20-day, right there. It's taking out the first initial level. So this could be interesting. This one just hasn't run compared to those others. What a cool one to look at. Let's step back and let's go back even further in time and see what else we can get, okay? Okay. Yeah, there is here. Breakout volume. Now, you know why we're not, well, let's see. No, that one, this is not in the S&P 500, and that is why it is not being flagged. But thanks for pointing it out. It's not in the 500. You're not, this is a fairly new stock, right? These guys just got, I want to say, $100 million equity investment from the US government. Okay. And but that's an interesting point. Are you getting the spike? Yes. Do you want to maybe scan through a larger basket? I mean, the NASDAQ would pull it up, but maybe you have NASDAQ plus other criteria in the scan, right? That could be really, really helpful. For example, over here in the scan, and I don't know if QBTS is in there. This is just S&P, so it's limited to this basket. So if we were to go down to public and say, oh geez, we're going to be able to get, well, there's the big baby. There's the NASDAQ composite, and that's going to pull it up. It might take a second to spin here, but we could do something like this. Let me show you how we could get something like this to pull up using the same information. Just go in here. Just go in here, go right into our, ooh, let's see. I want to do this. I'm going to use a uh, average volume. So I think I can go right into study actually over here. Click on the drop down and go to volume, average volume, using a bigger basket this way to pull up a company like that. And we can come in over here and we'll show you guys. So volume over 50-day periods, the average volume, shoot. Yeah, it has to be at least, where's QBTS at? QBTS is at what? Volume wise. Oh, 96 million. I think we're going to clear the 1 million just fine. Let's go something like a 3 million right there. Okay, 3 million and I scan. So an average 3 million, oh, I don't know if it's going to be average, but it might be. That's only 50. How many we got? 38. No, it's not above the average. Maybe that was too high. It was a big move on the day. But if I set in like a million, okay, it's going to pull up a lot more companies, by the way. A lot. There, well, 58. There you go. I might have to factor that out. Uh, no, I'm still not seeing it. Okay, it might be lower. Anyways, you can take a look at it, but that's how you get it. You can see, just see. The script would work if we're just widening that out or whatever we're looking at. A lot more companies in here that are over a million at least that could be looked at. But there you go. Okay. Um, let's see, you guys got it. Oh, I want to do this one too. Let's do this. I'm gonna go back to the 500. Actually, this is fine. The composite's fine to use. We got a larger basket of stocks. What if I just did this? This will be the last one we do. Since we got off to a little bit of a late start, but we made up for some ground there. That's okay. So I just did 500,000, and I'm going to go into the script, just thinking outside the box a little bit. And we're going to flip this into a weekly chart. And I'm going to say a weekly price channel of 20 weeks and a 14. Look back at 4 weeks. So this is kind of that longer term break. This is going to take some, ooh, no, that came up pretty good. Pretty fast, that is, I mean. So AKAM, Akamai. That's one that would be in the S&P 500 as well. AKAM. Okay, here's your weekly chart. Do you see a weekly breakout? I do. Yeah. Well, right here would be a 20-day breakout right there, and the volume was pretty good. So I realize that's a really big move, but you can get those two that might be taking out a really long-term range, right? So we don't know how long some of these tech stocks could run. If it's like, the computer revolution back in, 1981, it's about 5 years or so, 4 or 5 years. Then you've got the internet. That was about 4 to 5 years. That would put us at about 1 to 2 more years left in that. So some of these can just be bigger breakouts. So all right, everybody. Well, that's what we've got. We're just about out of time here, but if you found do me a favor, if you found today's discussion useful, smash that like button. Be sure to follow us too on our channel. You can do that over here just at Trader Talks. Let's just see how many we're up to right now. But smash that like button, about 197,000 followers right now. Subscribers, I should say. Subscribers. Go to the playlists over here. A lot of great stuff from Kip. Take a look at his stuff every morning. He's got great content to get you started off every day here within our stuff. And of course, yeah, if you come down here for this particular class, I'm going to go ahead and just right click this, and I will put the link down here. If you guys are interested, you can take a look at anything that we've had recently in any of those broadcasts. But there you go. Put this into the chat right here. Okay. All right, everybody. Well, it has been good being with you. We did tap into volume. Before we're done, though, I've got to do this. I did build. Dang. We lost a little bit of time at the beginning. The time that was going to be spent to tap into our relative indicator as well. So if I go into, sorry, I got to load this, my mind back thinking here. It was the relative volume that's right up here. One more. And instead of looking at one particular day, it's the relative volume breakout. I'll just share that in, and this is a 2 times. You can see this up top, folks. You see it right here? Really straightforward, same thing. This is built on the 5, 20. It's a 2 times over the average of 5-day volume. I think that can be really helpful too, as opposed to just choosing one day in the past. Okay, well, let's click OK here, and let me actually, yeah, I'll share it. This would be the relative one. Again, I will have both of these down below. Sorry I didn't get to that, but you guys get the idea. It's relative as opposed to the whole time frame, right? As opposed to just one time in the past. An average of volume over the last 5 days, and you can alter that. Really interesting too on the weekly as well. I got to run, folks. Great being with you. And there was not a survey today. Thank you, Kevin, very much for your help. Take care, everybody. Look forward to it next week. See you.